All right. Good afternoon, folks. Been a minute. Schedule's been a little hectic. Got a lot of things going on. But however, I am back with another market review. Just at the beginning of another week. Today is Monday, and at the beginning of a new month. It is August. Okay, it is August. I want to point out a couple things here on this. On the Dow Jones futures, the Russell futures, the S&P, and the NASDAQ charts. I want to take a look at this recent rally that the market has been in the month of July. And I'm going to point out something, just to let you guys know that I still think this is nothing but just a bear market rally. And I'm going to draw your attention first to a monthly chart of each one of these and show you guys anytime we come into a we're still in the bear market. Anytime within a longer term bear market, when you come to a major level of support, the market, find ways to do all it can to try to keep its head above water. In other words, it does not want to break that major level of support. But eventually, I think it will eventually break this major level of support. So that's what the market has been pretty much doing over the past month. It's been trying its best to fight its way away from that major level of support. Hold on one second, folks. So again, basically what markets are doing are trying its best to fight itself against this major level of support. So markets are trying its best to fight its way off of the major level of support. But again, there's still a lot of bad news in the pipe that eventually is going to trickle its way down to the markets. All right, folks, just bear with me. Just trying to deal with a happy dog right now. But I want to get through this because there's a lot to unpackage. So the folks won't get tripped up and think that, we're in a new bull market, but we are not. We're still in the bear market, and there's still a lot of negativity out there, and still have a lot of mixed signals that the Fed and our government is sending. The Fed at the last meeting made notion that they would not give forward guidance. And reason for that, I'm saying, they just don't want, to freak markets out and let markets think that they're going to back off of raising interest rates, or even back off at the rate or the pace at which they are raising interest rates. But I can see, as long as we still have this high inflation, and inflation, guys, it's not going to get any better. I think it's going to do nothing but get worse eventually. And as long as the Fed has this inflation to battle with, they're not going to back off of at their pace of raising rates. So don't let that fool you, folks. They're going to continue to keep their foot on the pedal in order to tame interest rates. And not only that, there's still a lot of other negativities that's within our economic global economics that is causing some headwinds, and they're not going anywhere. We still got issues in Ukraine, and don't sleep on what's happening between China and Taiwan, folks. That's still unfolding. China does not like the U.S. meddling over in that side of the world, because China believes that Taiwan belongs as part of their union or whatever. And China decides to do the same thing to Taiwan as Russia did to Ukraine. The U.S. is not going to stand idly by on that one for various reasons. So there's a lot of things to unfold, folks, that's happening. And then, lo and behold, we have all of a sudden there's these new COVID variants breaking out, and then we have monkeypox. Then there's threats of polio. I mean, it's so much stuff going on, folks. So we're still in the bear market. So with that said, and we could be going into a and also the Fed. Everybody saw, oh, we're not in a recession. We're not in a recession, folks. Google the definition of recession, folks. No matter what you try and what the Fed try to paint, or what the government may try to paint, Google the definition of recession for yourself. And they trying to change the definition of recession so it can suit their needs, so that they won't feel like they are falling looking like a failure. But folks, a recession is a recession. No matter how you paint it, read what a recession is. It's going to give you the full and true definition of recession. Now, so I am in the camp to believe that we are already in a recession, and things are just about to get a little bit worse as we head on towards the end of this year and the beginning of next year. So here is a monthly chart of the Dow Jones E-minis. And what I'm going to point out first on each one of these charts is show you the levels at which the markets fell from back in 2020, and show you where we are right now as it relates to that level. So this solid trend line you see me have drawn here is where the market fell from back in 2020. So in other words, we rallied up to that point, prior to 2020, got to that point, and we had a huge downturn. And once we, had that huge downturn in 2020, the markets bounced back resiliently, and we broke back above that level. This level now becomes a level of support on the way down. So this is a major level of support. If you look at on a monthly chart, this is where we stalled out on a monthly chart, and then we broke right back through it. So that's a major level of resistance. So when you hit a major level of resistance, more than likely the market is going to want to fight hard in order to not drop back below that level. So that's pretty much what happens. What's happening right now? Look at the Dow Jones. We got down to that level. We hit that level and started to bounce. We hit that level back in June. And look what happened. In June, we held that level. In July, we held that level. Markets wanted to get off the level. And then from July to August, we bounced right off of that level. And here's where we are now. So from July, from the end of June to the beginning of July, we bounced away from that level. And now markets are hovering right above that level. Okay. And if I was to go and take a look at each one of these indices, here is a look at the S&P E-minis. Okay, the solid line is where we want to pay close attention to. The solid line. We didn't make it all the way back down to that level in June and July with the S&P minis, but I think eventually we're going to make it down, and we're going to touch that level, and more than likely break it when others break as well. So we didn't touch that level yet in June and July, but we came very close, and the market rebounded. Look at the NASDAQ, same scenario. On this monthly chart, came back down to that level, and then July was a very, very strong month for stocks. So what did we do? We bounce towards the level and bounce. And the same thing with the Russell 2000 E-minis. The Russell and the Dow Jones were the ones who were pretty much laggards, and they got to that level first before the other markets did. And so that's the reason why we're seeing a bounce across the board on all markets. Here we are again, back at that level on the Russell 2000 E-minis, and now the markets are looking for the next big move. Now let's fast forward to what's happening now. Let's fast forward to what's happening now. So now let me go show you guys where we are now in the cycle, since we know where the ultimate level of support is. Now, where are we now? Oh, one more chart we're going to look at while we're looking at this monthly chart. Let's take a look at the SPXA. SPXA, again, which is one I tell you guys to pay attention to, which is the percentage of S&P 500 companies trading above the 200-day moving average. This one too has found a level of support. Look at that monthly chart. We found a level of support. Nice little bounce, but look at it's still in this range. Nice bounce from July, and we back to the top of this channel. So do we break out and go all the way back up here to all-time highs? I doubt it. I think we're going to start to stall where we're at now. So I think we're going to start to stall, which a lot of folks are probably going to start to say we are in a period of stagflation. But I think we'll start to stall out where we're at now before we start to head back down. Now let's look at current. We'll look at a 180-day time frame of a 4-hour chart. Now, point out a couple of things. So nice little rally at the bottom, off the bottom, even with the breadth of the market. So we got down here to these lows. Told you guys that in beginning of June, got down to almost just 0.1% of stocks trading above the 200-day moving average. We bounced off that level and headed back up to the top of the range. And look what's happening now. Back towards the top of this range, even within this breadth indicator. And look what happens once we get to the top of the range, folks. Normally, what's been happening over the past 180 days, we get to the top of the range, we find a way to stall and eventually head back down. And look at the RSI, the bottom of your screen. Deep overbought territory on a 4-hour chart. And when we got, and this is the most overbought we've been on this particular, most we've been in overbought territory on this particular indicator for a very long time. So the more than likely path resistance. I mean, the more than likely path is for this to head right back down towards the bottom of the range. And I think we'll probably see it over the next month or two. That is how this particular tool looks, the SPXA 200R. Now let's look at our general markets. Switch straight to the S&P E-minis. We're going to look at the futures since the futures market is running. Let's take a look at the S&P futures. Now, same thing, 180-day chart. And we got down to oversold territory again back in June. Look at the bottom of my screen. You'll see the RSI got down around June 13th. We got down to deep oversold territory. So of course we're going to get that huge bounce, and that's what happened. This whole rally we've seen over the past month and some change. It's just pretty much a bear market rally, a strong rally off oversold territory. Now we're back in overbought territory. Now this is what I want to point out. So nice strong rally off the bottom, and this is why I don't want people to get so trapped up in us rallying on to new highs, because we are back in a range, folks. Let me draw this out again. So we're back in a range, and this is a strong level here. It's a strong level here. I'm gonna highlight this here, where we rallied at before. When we've seen some type of rally before in this area. So we had a pullback before back in May, and we rallied back up to this range. Traveled in that range for almost a couple of weeks, and then we traded lower, back down to a level of support. And where are we now? We are back in that range again, folks. We are back in that range again, and I don't think we're gonna stay here as long as we did last time. I think we're gonna come right out of this range. And look at the bottom of my screen, you'll see the RSI shows overbought territory, and looks like overbought territory is starting to unwind as we speak. So more than likely, we are at the end of this short-term rally. More than likely, we probably can see a couple more days of some sideways trend in action, but I don't think we're going to go too much further, too much higher. I think this range between where the S&P is and the S&P E-minis now, between this 4,100 to 4,200 level, I think that is going to be a strong area resistance, and I think we're probably going to end up breaking this level and start to head back lower eventually. So again, I think we're about to come to an area where this rally is probably going to pause, and then eventually from the pause we'll start to head lower. And if you look at the RSI, we're in overbought territory. Get rid of this, remove that, and I go right down the list. Look at the Russell 2000 E-minis. You're going to see the same type of scenario. Same type of scenario, same range. And here's that range right here. Here's the range we got up to after we had a pullback almost to that major support level. Rally from May up until around June, and then within a week we washed out all the way back down to this level of support. So this particular level up here becomes a strong area of resistance. Move this. So this area up here becomes a strong level of resistance. So this is the range that price action is going to be dealing with. And the bottom range is right around here. That's the range we are now on this Russell 2000 E-minis. The last time we got to this range, we bounced around in here for a bit, and then eventually we came right down, and we came down pretty quick. So I would expect to see the same thing here. Back in that range now. I don't think we're going to go much higher. And then if you look at the RSI down here as well, you'll see the RSI overbought territory. So in this range, I'm looking for price action to start to stall and start to head lower eventually. And again, like I said, I can go right on down the line with looking at all entities. Look at the NASDAQ E-minis, same scenario. Here's that tight range area. Got it to as high as this point here. Range bound for a bit. So that's where we are now. And eventually we'll break out of this range and head lower. And NASDAQ is really pressing the top of that range in a big way. NASDAQ is really pressing the top of that range. I'm looking for NASDAQ to fail eventually and come back down. And there's some heavy hitters, folks, that are reporting this. Be AMD and NVIDIA. We already saw what happened to Qualcomm. So all they got to do is disappoint just a little bit, and I think it's going to help feed this bear market. I mean, feed this bear, and start to help pull this back down towards the bottom of this range. Then eventually break this range and head back down towards these lows. And if we take a look at the Dow Jones E-minis, same scenario. in overbought territory, is ready to come out of overbought territory, now it appears. And again, here's that range. And here's the bottom of this range. And again, if we look at the RSI, we'll see the RSI also in overbought territory and starting to come out of overbought territory. So that's where we stand now as we start to head into a new month. We are starting to possibly unravel, probably about to unravel this long stretch of rally that we've seen since July. All right, folks. So that is something that we need to pay close attention to as we head into August. Will we have a strong month like we did in July? I doubt it. I doubt it very seriously. I think the more likely path is to head back down towards the strong level of support, which is at this major level support level. I think we're going to be heading back down there between now and the end of August. So that's my theory. And eventually, folks, if we break this level down here, we're really going to see the bears sink their teeth into this recession in a major way. So that's something to pay close attention to. I think we are in the midst of a major pullback here in the near future. What else? Okay, take a look at the VIX real quick, because the VIX also is a lead indicator. Let me look at the VIX futures. So what happened with the VIX futures if the overall market was in overbought territory? Then that means the VIX more likely was oversold territory. And what will it more than likely do? Get an oversold bounce. And what are we starting to see in the VIX now? An oversold bounce, folks. Exactly. So here's a long stretch that we've seen the VIX in for quite some time. Even broke down below a major level of support. Normally you overshoot to the downside. So what's happening now? Look at the VIX is starting to show some strength. So the VIX was in overbought territory. So now the role's about to flip. VIX was in oversold territory. VIX was in oversold territory. Now it's starting to get its over to full sold territory bounce. So eventually, I think the VIX will finally start to move back up. And it's not going to be a straight line. I don't believe it's going to be a straight line. Anything is possible, but I don't believe it's going to be a straight line. But I do think we're going to start to creep higher in the VIX over the coming weeks or so. So that's where we stand now, folks. So again, we are still in the bear market, folks. This bear market is not over. So don't let the Fed fool you. Don't let our government fool you. Don't let price action that you've seen in some of these bear market rally stocks is jumping 10, 20, 30%. Don't let none of that fool you either. You know what I'm saying? We are still in the bear market. The bull market has not resumed yet, and we may be a long way from that happening. All right. All right, folks. So all I wanted to do was take time to break down this technical analysis looking piece from a technical standpoint and see what happens. But I think inflation is really going to start to dig into this market also and raise ugly teeth. One area we didn't check, and I did not get a chance to check this at all, which is the crude oil. And crude oil started to sell off too as well. So it started looking the same way as stocks, but I believe crude it could possibly find some footing. We have to see how it pans out, because right now crude is back to a level of support area. And it is trying to break down, folks. So we have to see how this pans out. But I think crude may find some support around here. So I'm watching carefully right around, every time we got back to this level that we are now, right around this 93, 92 level, crude has found a way to bounce. So watching this carefully to see if crude finally get this bounce and head higher as well. That won't be good for markets either. That's also going to show that inflation is still strong. But we're back at a major level of support for crude. So we'll be watching that level closely to see if it can hold that level. So right around this $93 level, that's the level to really be paying attention to with crude, and see if we finally get a bounce from that level. If crude finally finds a way to get back above, get out of this range, back above 102, head WTI crude is. If we head up to 102, 3, 4, 5, and I think that's when we can start to really see crude take off back to the upside. So that's what crude looks like right now. All right, folks, that's all I have to share with you guys. Hopefully this is some good information that you can use. Again, folks, I can't reiterate enough. We're still in the bear market. We had a nice bear market rally in July, and that bear market rally may be about to come to an end. So pay close attention to the VIX, pay close attention to the breadth of the market by looking at the PXXA 200R, and pay close attention to the news, folks, what's going on with economic news and a lot of this world news is happening around our world. So that you can see, what's actually happening beneath the surface that can also help add fuel to this recession that we're currently in, I believe. All right, folks, I'll catch you guys on the next video. Tim Davis here signing off. See ya.